Hello and welcome to the Business Standards Morning Show. I'm Kanishka Gupta and let's have a look at the stories for the day.
इस बार मनाली चलते हैं।
नहीं गोवा।
We Indians disagree on everything, but we agree. SBI is the banker to every Indian.
SBI से ट्रैक्टर लोन लिया, पाजी ये 100% सही किया।
SBI is the banker to every Indian.
The year 2020 tested everyone's resilience. For the unprivileged, the first wave of pandemic and the subsequent lockdown was harsher. But a recent IMF working paper said that consumption inequality during the COVID-19 pandemic affected 2021 fell to near the lowest level in the last 40 years. It was due to the government's free ration scheme. Let us find out how.
A recently published IMF working paper said that, quote, the effect of the food subsidy adjustments on poverty is striking. Real inequality, as measured by the Gini coefficient, has declined to near its lowest levels reached in the last 40 years. Unquote. The IMF has clarified that the views expressed in the paper are of the authors Surjit Bhalla, Executive Director for India at the fund, Arvind Virmani, former Chief Economic Advisor, and Karan Bhasin, a policy researcher, and do not necessarily represent those of the multilateral agency. The report, in a way, hailed the implementation of the free ration scheme while pointing out that it was marred by problems earlier. It said that just 7 years after the expansion of the PDS policy, the then Prime Minister Rajiv Gandhi had described the PDS system in 1985 as corrupt and or inefficient, and concluded that only 15% of the funds meant for redistribution to the poor reached the poor. India announced an expansion of this already large food subsidy program in 2013. The report pointed out that one of the differences with the past policy was a decline in coverage. Instead of near universal access, it was now limited to support for the bottom half of the urban and bottom 2/3 of the rural population. The food support was increased during the pandemic. The food grain ration was doubled for each recipient from 5 kgs of wheat or rice per month to 10 kgs in 2020. The report claimed that consumption inequality during the COVID-affected 2020-21 in India fell to near the lowest level in the last 40 years, primarily because of the free food supply to 800 million people among other factors. However, the consumption inequality rose a bit during 2020-21 compared to the previous year if food transfers are not taken into account, showed the paper titled Pandemic, Poverty and Inequality Evidence from India. Besides, inequality in wages of casual and daily wage workers declined dramatically during 2019-20 compared to 2011-2012, but it rose from the previous year of 2018-19. The inequality is measured by Gini coefficient. The Gini coefficient of 100 means perfect inequality and 0 means perfect equality. The Gini coefficient in consumption declined to 29.4 during 2020-21, which is very close to its lowest level of 28.4 in 1993-94, said the paper. The score on this parameter stood at 30.4 in 2019-20, which was also lower than 30.6 in the previous year. However, if subsidized food transfers are not taken into account, the coefficient rose a bit to 31.5 during 2020-21 from 31.4 in 2019-20. These numbers are calculated on the basis of real private final consumption expenditure growth beyond 2011-12. The working paper used the Consumption Expenditure Survey by the National Statistical Office for its calculations. But the last such survey came in 2011-12. The latest survey of 2017-18 was junked by the government. The paper used another methodology on the basis of real state gross domestic product or SGDP growth to gauge the numbers beyond 2011-2012. On the basis of this methodology, the Gini declined to 30.3 during 2020-21 from 31.3 in 2019-20 if food transfers are taken into account. The inequality was the lowest since 2011-12. However, if food transfers are not taken into account, the coefficient remained constant at 32.4 during 2020-21 and 2019-20. This way, the inequality was the highest in the past 12 years during 2019-20 and stayed there during 2020-21. The paper also shows that wage inequality for the casual and salaried workers showed a larger decline in Gini from 49.89 in 2011-12 to 43.04 in 2019-20. Quote, "This is very large improvement suggestive of both inclusive growth and healthy income growth amongst a larger fraction of the poor casual daily wage workers," said the paper. However, wage inequality is compared to the Gini coefficient of 42 in 2018-19. It seems surprising that consumption inequality was almost the lowest in 2020-21 in 40 years when everyone is talking about a K-shaped recovery, jobs were below 2019 levels, and wage growth below inflation. Responding to this query, Virmani clarified that the study measures the Gini coefficient of consumption expenditures, not of income or of wealth.
The first part is that people mix up wealth effects on income, consumption, everything is mixed up. Okay. For example, when the lockdown occurred, there was no income for majority of people, whether they are rich or poor, but their wealth is being drawn down. So during the first year of the pandemic, everybody is drawing down wealth, but obviously the poor have less wealth and they'll run into the constraint. The second part is what is exactly we have done. What we have done is measured the distribution of consumption expenditure, not of wealth, not of income. So what is the economic difference? So the difference is that people generally maintain their consumption to the extent that they can by borrowing or lending or using their savings. So that's the first point, to be 100% clear. The second point is, okay, once that is clear, what is it that our results show? So what our results show is that if you look at the normal, the usual way of measuring income distribution, the Gini coefficient, there was no change between 1919 and 20. Okay, there's no change. What the change is coming from is that if you look at the Gini coefficient, the real Gini coefficient adjusted for food subsidies throughout the whole period, then there is a sharp fall in 2020. So you have to be very careful in understanding what we are saying. So all this effect, so we have it without food subsidies, there is no change between 1990-20 and 2021. When you take the whole thing with food subsidies, there is a sharp change of 1%, which basically takes it below the earlier periods. Now, so that is the thing. So you have to be, just to give you some numbers, without adjustment, the Gini quotient in 2019 was worse than in 2011 or 2004, which we know from the surveys. However, when you account for the subsidies, then the 2019 coefficient was almost the same as 2004, but was worse than in 2011. So, but when you add the free food which was given, then the Gini coefficient improves.
There is also evidence from periodic labor force quarterly urban surveys that regular wage employees suffered more job losses than casual labor, and self-employed and secondary workers suffered more job losses than tertiary, while agriculture gained jobs. But Virmani said that these two facts do not suggest a worsening income distribution during 2020. Meanwhile, Union Finance Minister Nirmala Sitharaman has welcomed the report. She said that, quote, "The working paper notes that social safety net given to the poor by the way of expansion of country's food subsidy program absorbed a major chunk of the pandemic shock," unquote.
सब अच्छी दिख रही हैं यार, कौन सी खरीदूं?
ये तो वही बात हुई, 4000 शेयर्स लिस्टेड है, कौन सा लूं?
वो तो सबसे आसान है।
तुझे 5 पैसा नहीं पता?
अब तो सबको पता है। 5 पैसा पर है 4000 स्टॉक्स की रिसर्च, टेक्निकल टूल्स और इन्वेस्टमेंट आइडियाज। डाउनलोड 5 पैसा नाउ।
अब तो सबको पता है, investing made easy and rewarding with 5 paisa. Investments in securities market are subject to market risks. Read all the related documents carefully before investing.
It's not just the scheme implementation, but India is doing well in higher education too. 35 programs being offered in 16 higher education institutes in the country have made it to the global top 100 in their respective subject categories. Is higher education in India coming of age? Our next report offers a peek into the recent QS World University ranking and what it says.
The 12th edition of the QS World University Rankings by Subject is out and springs a surprise on some of the IITs. Chennai-based Savita Institute of Medical and Technical Sciences and Dhanbad's Indian School of Mines University are among the 16 institutes that made it to the global top 100 in the UK-based Quacquarelli Simmons latest rankings. Savita Institute of Medical and Technical Sciences has been placed 18th globally for dentistry, and IIT ISM Dhanbad is India's second highest ranked at 26th place for mineral and mining engineering subject. 35 programs offered by 16 Indian higher education institutions have managed to break into the top 100 in the world in the latest QS World University Rankings by Subject 2022. This is a considerable improvement from last year when 25 courses by 12 institutions made it to the top 100. Rising over 100 places, the National Institute of Pharmaceutical Education and Research, Mohali, made the highest jump in rankings by being placed 44th in Pharmacy and Pharmacology subject. Programs from 6 of the 8 public institutes of eminence have figured in the top 100. IIT Madras ranked 30th for Petroleum Engineering, becoming India's highest ranking public institute of eminence. Others include IIT Delhi, IIT Bombay, IIT Kharagpur, Delhi University, and the Indian Institute of Science, Bengaluru. The University of Delhi was ranked 41st in the Development Studies subject. The OP Jindal Global University has been placed at the 70th position for Law and Legal Studies. It is the only private institute of eminence and the only private institute, apart from Savita Institute of Medical and Technical Sciences, to make it to the top 100. Public institutes of eminence remained better represented in the rankings than private ones. QS said that after 4.5 years since the inception of the country's Institutes of Eminence scheme, the recognized universities gained moderate ground on the global stage. A significant amount of autonomy in academic, administrative, and financial matters has been provided under the regulatory framework to these institutions. Financial assistance of up to ₹1,000 crore over a period of 5 years is granted by the government to each of the public institutions of eminence. In business and management studies, Indian Institutes of Management, Bangalore and Ahmedabad bagged top 100 ranks. So what's the roadmap for Indian universities to improve their position in QS rankings?
First of all, we must congratulate the institutions and the program heads. There is some amount of improvement, though considering the number of institutions that we have, that number is still very small. We need to understand how this QS ranking works. There are 6 parameters which they look at. The academic reputation is something very, very critical. This is again a people-based survey. Therefore, it's very necessary that people know an institution, people know the faculty, people know the reputation. How many of those students actually end up in better institutions, for example, MIT or Stanford, or a long sustenance is required where repeated excellence is shown in terms of the research potential that they have. The second is the employer reputation. The third most important area that they give credence to is faculty-student ratio. Now, this is where our institutions suffer. They also give a great importance to the internationalization, international faculty on the campus and international students on the campus. In fact, many of our institutions have this, they promote their young faculty to do PhD in their own universities, their own institutions, and so on. This must stop forthwith. Finally, just one point, our institutions lack, productization. We give great importance to research, but then at the end of the day, does that research translate to any products? How many are funded? And things like that.
While Indian institutes have made great strides towards achieving world-class quality, more efforts are required in the areas of faculty-to-student ratio, international faculty and international students to climb the QS rankings of best universities and best programs.
यार मत पूछ यार, फिर से स्टॉक्स में फंस गया। तो स्टॉक्स के साथ बॉन्ड्स, इंश्योरेंस, गोल्ड में बैलेंस कर। इसमें बहुत तामझाम है। तुझे 5 पैसा नहीं पता?
अब तो सबको पता है। 5 पैसा है ऑल इन वन अकाउंट। डाउनलोड 5 पैसा नाउ।
अब तो सबको पता है. Investing made easy and rewarding with 5 paisa. Investments in securities market are subject to market risks. Read all the related documents carefully before investing.
After higher education, let us move on to markets. The Q4 results season shall kick in next week, and it will have a bearing on the market trend. On Friday, the market participants will also keenly track the RBI policy developments for cues on the future rate cycle and inflation forecast. Watch our next report to know how the markets are placed ahead of the earnings season and the key levels you need to keep a tab on.
It has been a choppy ride for the Indian markets thus far in 2022, as global and domestic headwinds impacted sentiment. The next leg of the market trend is likely to be led by Q4 earnings, starting with IT majors like TCS and Infosys on April 11 and April 13 respectively. HDFC Bank is scheduled to announce its numbers on April 16. As per the FNO data, the Nifty witnessed some long unwinding in the first week of April, as traders opted to take home some profit ahead of the earnings season and RBI policy outcome on April 8. The Nifty open interest or OI has increased sharply by 51.87 lakh contracts at March end owing to the April rollover. However, post that, the OI has dropped in successive trading sessions along with a fall in Nifty in the last 3 trading sessions, thus indicating long unwinding. Among frontline IT stocks that are scheduled to announce their March quarter numbers next week, Infosys has seen a consistent rise in OI since the start of the month, even as the underlying price declined by nearly 5%. Similarly, TCS too has seen a rise in OI while the price has declined marginally. The options data reads as follows. A closer look at the options data indicates a likely trading range of 3,650 rupees to 4,000 rupees for TCS, with some resistance expected around 3,875 rupees odd levels. Infosys, on the other hand, is expected to trade in the range of 1,680 rupees to 1,940 rupees. Let's go to Business Standard's Avdut Bakar to understand how you should position yourself in the markets ahead of the Q4 earnings season and the key levels for the Nifty 50, Nifty IT and Nifty Bank indexes.
The Nifty 50 index is resilient to cross 18,000 levels, and as long as we don't have a robust close above this 18,000 mark, we could see profit booking in the market. The immediate support comes at 17,500. And when looked at a broader perspective, one could easily see 70,300 as a medium-term support for this bullish trend. As far as Nifty Bank is concerned, the next breakout level comes at 39,500 and one could easily see simultaneous resistance at current levels. On the downside, it has a support of 200 DMA which comes to 36,800 levels, and as long as it defends this mark, one could see a revival in trend. Nifty IT index has seen a decent reversal in recent time. It has actually jumped 8% from the lows of 34,000 to the high of 36,800 levels. For Nifty IT index, the trend remains slightly sluggish. However, as long as it defends 35,000 levels, we could definitely see revival in Nifty IT and IT stocks.
On Friday, the market participants will keenly track the RBI policy developments for cues on the future rate cycle and inflation forecast.
तुम इतना डर गए? अब क्या किया?
शेयर्स में ट्रेडिंग।
तुम्हें 5 पैसा नहीं पता?
ओए, अब तो सबको पता है। 5 पैसा पर मिलते हैं रिसर्च टूल्स, पोर्टफोलियो एनालिटिक्स और इन्वेस्टमेंट आइडियाज भी। डाउनलोड 5 पैसा नाउ।
अब तो सबको पता है, investing made easy and rewarding with 5 paisa. Investments in securities market are subject to market risks. Read all the related documents carefully before investing.
The world and the markets too are breathing easy now, as less dangerous siblings of coronavirus have displaced the deadly Delta variant. One of them, Omicron's subvariant BA.2, is the dominant strain in the most countries now. Let us know more about it.
first identified in November 2021, the BA.2 sublineage of the Omicron variant has now become dominant worldwide, according to the World Health Organization. The BA.2 represented nearly 86% of all sequenced cases between February 16th and March 17th. Initial data suggests that BA.2 appears inherently more transmissible than its highly contagious Omicron siblings, BA.1 and BA.1.1, which currently remains the most common. The BA.1 was previously the most common Omicron subvariant reported. So far, there is insufficient evidence to determine whether BA.2 causes more severe illness than BA.1, but limited early evidence suggests it may not be more severe than BA.1. Omicron itself has been consistently found to have lower severity when compared to the Delta variant. Scientists say that as with other Omicron variants, vaccines are less effective against BA.2, but booster shots can provide significant protection. BA.2 has been held responsible for the recent surge in cases in China and European countries like the UK and Germany. It is often called the stealth variant because it is slightly harder to track. A missing gene in BA.1 allowed it to be tracked by default through a common PCR test, which uses 3 genes to detect coronavirus. BA.2, on the other hand, can only be found by genomic sequencing since standard PCR tests could not tell it apart from the Delta variant. While BA.1 and BA.2 share around 30 mutations, BA.2 has 8 unique mutations not found in BA.1 and lacks 13 mutations that BA.1 does have. One of the key concerns about BA.2 was whether it could reinfect those who had already had the original BA.1 subvariant of Omicron. A recent study by Danish scientists, which is yet to be peer-reviewed, suggested that people previously infected with BA.1 have strong protection against BA.2. The study found that Omicron BA.2 reinfections do occur shortly after BA.1 reinfections, but are rare.
इसको 30 डिग्रीज कर देते हैं। अरे नहीं यार 45 डिग्री सही है।
We Indians disagree on everything, but we agree. SBI is the banker to every Indian.
SBI का वीडियो KYC सेविंग्स अकाउंट। Finally I agree.
SBI is the banker to every Indian.
Some news reports claim that a highly transmissible coronavirus variant, XE, was detected in Mumbai on Thursday. But the government denied it hours later. That's all for today. We will be back with more news and analysis on our next episode. Stay tuned and thank you for watching. If you like this video, share it and subscribe to Business Standard. For more news, views and insights, log on to www.business-standard.com. Do also follow us on YouTube, Twitter, Facebook, Instagram, Telegram and LinkedIn.